eventful week, mainly in the crypto space with the Coinbase IPO. Quite a bit of volume. We're touching new all-time highs on SPY. QQQ is moving a little bit slower, but still sitting around all-time highs and moving as such. So pretty eventful week. Bitcoin reached a new all-time high. Obviously, Doge. Another one we're holding ADA as well, Cardano. All reaching new all-time highs. Doge really going ballistic. Turning into quote unquote the new meme ticker, you could say. We're gaining a lot of traction. So it has since sold off a bit from the all-time high, which we reached, I believe, 2 days ago. Sorry, yesterday morning, and then it started selling off. But yeah, it was pretty eventful. We played it really good this week, especially with crypto equities, and we added on our Tesla position, so on. We have quite a few earnings this week, which I think can make a significant impact in the market. I believe more so to the upside, but we'll see how it goes. We are pretty overextended at this point, but some of the big tech earnings are this week. On Tuesday, Netflix. Also Tuesday, some of the pharma companies are reporting. So Abbott, P&G, Johnson & Johnson. So you can see some of the metrics on vaccine rollout with those earning calls. We also have Coca-Cola Monday pre-market, IBM Monday after hours. Another big one is Chipotle Wednesday after hours. And the main big one, in addition to Netflix, is Snapchat on Thursday after hours. There's also Intel, AT&T, and American Express, both on Thursday and Friday. So those are ones to watch. But the main ones will be Snapchat and Netflix. Both of these ones will have quite high expectations. As last quarter's earnings for both companies were, blowout earnings, especially Snapchat. It was a bit of a paradigm shift from Snapchat's usual, flattish, bearish movement. Snapchat really blew out earnings, and it really surpassed Wall Street estimates, which sent the stock kind of rallying. Netflix, the same thing occurred, not to the extent of Snap, but a similar projection. So this quarter's earnings will be pretty significant. I think they have to kind of put up pretty good numbers, but we'll see how it goes. Likely a play won't be too great there, but we'll see how it goes. Another catalyst this week as well is the Apple event, which occurs on Tuesday, so April 20th. So with the Apple event, there will be definitely a play, and I'll be watching how price action goes on both Monday and Tuesday, and I'll be alerting accordingly. I think a day trade will be good, going into the event, and we'll see how it goes. So I'll be watching the price action on Apple pretty closely. In addition, DJ alerted some marijuana tickers, so those should be pretty good heading into 420 on April 20th on Tuesday. So we'll be watching that. We'll get a little bit more into that later on at the live session. So I'll just pass it on to DJ, who will go over his usual SPY analysis.
Yeah. Okay. Yeah. We'll begin just the weekly SPY analysis as usual. As you guys can see, the SPY chart put up right here, and it's just another week of all-time highs. Low volume, straight grind up. I guess you could say we had one red day on SPY for the first day in, I would say, like about 20 green days. 19 out of 20 of them have been green, and one of them have been red. And that was like literally the only sign the Bears ever had. And then literally it just gapped up all-time highs the next week, and we continued back up. So we can see we're actually quite overbought now on the daily. RSI is almost 75 on a daily. And if I were to zoom out, we didn't reach this high of a daily RSI since September 2nd of last year, where SPY made that move from 334 to 358 in a span of about a week and a half. That RSI peaked at around, we can see around 82 or so. So we are very close to that previous peak RSI, but regardless, we are quite overbought. As you guys can kind of see in the past, that every time, just just looking at it, just looking at a macro point of view using the RSI indicators, you can see that whenever SPY gets fairly overbought above the 70 line, there is typically quite a sharp downturn back down, and where it cools the RSI back to to the mid and the low 30s. And we can see every time SPY is quite oversold, we have quite a sharp bounce the other direction. We can see that multiple times, 2018, December, October, November 2019, a sharp pull, sharp pull, sharp pulls. So uh, it doesn't mean that we're necessarily going to get one, next week or in the next few days, but it does mean from a more, week to week, month to month kind of perspective, there isn't really too much reason to be entering SPY or long calls here, other than for catalyst situations, until we get kind of a sharp pull. It's also kind of hard to enter puts at the moment because we can very well kind of continue this pattern of low volume drift up for who knows how long. Could be a few days, a week, or 2 weeks. But each day, it's getting quite overbought here, so it wouldn't make too much sense to enter a swing. New kind of monthly swing calls. Shorter term calls are fine because it's still bullish on the trend, and you can still get that momentum to the upside. But for monthly calls or so, if it goes up, it's not going up too much, but they have more risk of heading down more in the short term if we get one of these just pullbacks. Even like we don't need to turn bearish by any means, but just a very healthy pullback would drop by 10 points or so, and it would probably wipe most of the monthly calls, even 30-40%. So I'm watching here to see how high we kind of continue up before going further and kind of playing just the shorter term stuff. I did post in the group, and I did make a recent post on Twitter as well on my update and outlook. Basically, I don't think overall the risk reward is too great at the moment. We could very well, continue green for all of Q2 or so, but I think more or less there's about, I would say, about 3 to maybe 10% upside on the index, but about a 30-40% downside on the index. But this is on a view of multiple months to a year. So I'm not talking about the next few days or a week or so. It's just for the latter half of 2021 and maybe 2022. That's basically the kind of overall outlook and forecast. Something strange and notable in my opinion is, although we're seeing both SPY and QQQ hit these all-time highs on this kind of very low volume move, I'm sure that it's not exactly what everyone is kind of expecting with SPY all-time highs, QQQ all-time highs, but many stocks are nowhere close to their all-time highs. A lot of tech stocks are quite far away. It's really just the large cap stocks like Microsoft, Google, that's kind of pulling the weight. For example, Facebook, um, and but even the reopen stocks, like cruises, airlines, none of those are all-time highs. The banks are near it, but not necessarily all-time highs. And a lot of more than I would say three-quarters of the tech stocks are about 10 or 15% away from all-time highs. So it's kind of a very weird situation right now where the indexes are shooting highs, but not everything is really correlating or following appropriately at the moment. And of course, the SPAC sector is really underperforming. Besides even lagging, it's kind of even dropping during this. So it's kind of a weird time in the markets where it feels like if you're an index trader, then you're doing fine and you're winning. But if you're not kind of focused on indexes and focus more on individual picks, it's actually it's not really a time where you really see you really think that the market is really bullish and all-time highs because uh, the majority of the stocks haven't really got there. So that could kind of mean two things, that we could see that turn around, and we could see sort of the majority of stocks correlate back to the indexes and uh, run up to test all-time highs, which will bring the index further up significantly, since it hasn't included those in the run yet. Or it could kind of mean that this kind of final move up is sort of just on the index and quote unquote more value kind of stocks that are kind of shooting it up, and these more speculative and growth stocks have more or less topped out. It's not too clear at the moment, so we'll keep on monitoring, but it doesn't seem like a lot of these growth stocks are following too much. So a lot of these stocks are starting to trend change on a daily, so we could see a bit of a shift there. But anyways, back to SPY. Yeah, just very bullish daily chart, daily EMAs, sloping upwards, upper Bollinger sloping upwards, and continuing this price action channel of just pretty much a staircase up. Like I said, the notable thing is the RSI now, officially overbought, says 75, and we haven't reached these levels in a while. It's quite likely, I think we should see some sort of multi-day pullback in the next week. Otherwise, it's likely that SPY's RSI will hit maybe above 80 in the daily, which hasn't happened for a really long time, and then we might really see a very high move up immediately on SPY to the 430 level by next week if we don't cool off. So I do think we will see another one of these red days at the minimum, but I mean, just one of these that is nowhere close to changing the trend. And we do have a lot of gaps to fill on SPY. There's a 400 and 403 gap here. There's a 396 gap here. So there's a lot of space to kind of pull back ever since we started to move from 384. But it's looking kind of unlikely that we'll ever get a major pullback below 400. If we were to get a major pullback below 400, then I think it would be quite difficult to kind of continue back to all-time highs on SPY again. So I think as long as we can hold this, I would say about this 406 level on a pull, then we can continue kind of the SPY melt up. QQQ, a little bit weaker than SPY as we can see, but still all-time highs, less of a move up, but not It's not officially overbought yet, but quite a strong move as well on the daily charts. QQQ weekly chart is now in its third green week, hitting the upper Bollinger on the weekly. So next week we could see further continuation. Same thing as SPY. Let's take a look at SPY weekly, which I forgot to. Fourth green week, very strong week above the weekly upper Bollinger Band. So that hasn't happened in a while actually. The last time it kind of touched this upper Bollinger was November of last year. So it's been around 4 or 5 months since then. And now we've had 1 and 2 weeks above the weekly Bollinger on SPY. And that hasn't really happened for a very long time. I'd say multiple years really. We've never really had 2 full weeks on SPY where it traded above the weekly upper Bollinger Band. Like we can see here, at most it's kind of 1 week and it rejects, 1 week and rejects. And it's all kind of held down here on the move up. So yeah, we really are quite overbought here. This is kind of the first 2 weeks above weekly upper Bollinger on SPY in maybe uh, 2 or 3 years. The last time I kind of see it is January in 2018. So we could see definitely a sharper pullback here, or we could see one of these melt up projections in which we've been saying. It's sort of low volume melt up. Nobody really kind of believes in it, and then everyone's waiting for a pull, and it kind of continues to grind up, and then we kind of just have an absolute rip up. If that were to be the case, and next week were a really strong green week and a third week above the weekly upper Bollinger, then very well we could see the short-term top or the actual top of the overall market come much sooner than later because of just the amount of pure momentum and speed is going up. As both Ramji and I say, to get a clear top in the market, you need something like a climax top, which is just like a really crazy green day or week where everybody jumps in and then completely reverse from like a really strong green day into a really weak bear day, a red day. And that's kind of the signal to kind of mark the short-term top is one of those massive green to red candles. So until we kind of see that, it's very likely that the actual short-term, near-term top is not in. So we'll be watching out for that, one of the weekly volume climax candles. For now, we're still trending up. So I said in the outlook, not too keen on the risk reward right now. So personally, I'm about 75-80% cash in the trading account at the moment. Looking to play more shorter term plays. So shorter term option plays or day trades. Might still be getting like monthly options, but for shorter term flips, just to kind of avoid the premium decays and such. But I think overall, I'm not, wouldn't be too comfortable in any kind of call that is in the very short term, like any April or May kind of expiry call would be pretty high risk in my opinion, and one for just kind of a day trade or so. We're still in some of the long QQQ September calls. I think those are fine because a long call on the index is quite safe, and quite secure, and it's trending up. It's just the individual stocks and a shorter term play, I would say, is kind of too risky to enter enter a new play at the moment. So shorter term plays and maybe some plays on earnings. Like Ramji mentioned, we're getting to earnings season again. Like this is the start of the earnings season cycle. With the tech stocks, the FANG stocks reporting, and then a bunch of followed by cloud companies and all these companies for the next about 4 to 6 weeks is earnings season. So we'll see how we go from here. Moving on to cover Square a little bit. I did mention last week that we pretty much exited the majority of the Square calls on this move up. It was a very strong, $70 move up on Square. It's about 30% move in the span of 2 weeks. And, we had, really good gains on the calls, 100, 200%, and really sold out here. And then I actually alerted some Square puts once we got here, just because of the sheer momentum that it has gotten, and I felt a pullback was necessary. Just kind of looking back previously on Square, whenever we have a very large move up, there seems to be uh, kind of a decent move to the downward trend as well. And once we reach the bottom, we kind of have a relatively sharp move up. So Square is one of these patterns where it kind of moves very nicely, both up and downwards. So did enter Square puts, which I ended up playing it very conservatively and basically closing out on Friday. Um, I noticed that we were trading right on this daily EMA support, and although we could very well break this daily EMA support and see further downside to about I would say the 245 level, I do believe this level would get bought if it gets there, and another kind of wave up would occur. Played it safe just because we could very well just hold this daily EMA and gap up on Monday and continue up. So I decided to play it quite safe. We had a pretty good 2-day 10% pullback, which the puts did fairly well. So we're quite okay with that. If we do break this daily EMA and we bounce back to the 240 levels, I'd probably be looking to um, slowly scale into a very long kind of Square play, maybe June or July play, if we get here. What's notable is we had this kind of 2 to 3 day pullback on Square, although the indexes SPY and QQQ have been all-time highs. We did manage to get pullback on individual tickers, which is kind of saying that the correlation isn't really going exact, as we've clearly kind of noticed that in the past couple of weeks, where the correlation isn't very strong between some individual stocks and the overall index like it has been in the past. So that makes it a little bit more tricky, because just because it's not going up when the index is going up, it doesn't really mean that if the index goes down, it might not go. It may also just go down with it. So it's a little bit of a more cautionary point there. So had to play pretty safe. SKLZ, it been scaling in some warrants. This is the chart of the stock, SKLZ. Many people say this is a very strong, very strong growth company, speculative play. It's been really, really beaten up very hard on a daily chart. We've fallen from all-time highs. I think almost 70 or 75% from all-time highs, and we're at levels we didn't see since last November, like pre-announcement on the SPAC, I would even say. The clear pattern here is we can see that we're really getting pushed down hard on the daily EMA, which I'm going to bring up. And I think that is actually going to be a reason why it's a pretty good candidate for a strong bounce play. So if we notice here, pretty much we've been algoed down and pushed down in this channel for a very long time. Pretty much, for the longest time, we've been having this downward channel. I'll try to draw it a bit better. So we've been pushed down. What's notable here is the speed that the daily EMA has been pushing it down has started to flatten out compared to how aggressive it was before. And of course, the price has fallen significantly as well already. So there is more and more chance of a bottom forming pretty much every day. And we do notice here the lower daily lower Bollinger Band, which has been sloping very hard towards the downside, has actually started to reflect a little bit near the end. So it's we can see it's been rejecting this daily EMA for the past, let's say, month or 2 months, and with the daily lower Bollinger Band starting to slope up, I think it's actually quite a likely scenario that we will see a move above this in the coming week, or maybe two weeks in the latest. Let's say the bottom is pretty much around 1350 to 14 if we get there. And if we kind of reverse this daily trend and shoot up, I could see a reversal back to probably around 40 to 50% from the lows. So I'd say around a move to 20 to 22 would be a good target in the coming 4 weeks or so. There is a catalyst, which is their earnings report is going to be on May 4th, which is in 2 weeks exact. It's also a very heavily shorted stock. So with the chart setting up for a potential reversal with the earnings catalyst in 2 weeks and having the stock price dropped around 70% already, I think the odds are probably around 80 to 90% that we will see a bit of a move up where shorts will kind of cover into the earnings and bulls will kind of come back and re-enter the stock. And we should see a move above the daily EMA, which will cause the algos to turn bullish short term. So I think we will see about a 30 to 40% upside move in the next 2-3 weeks from here. It really depends where the bottom is, but about 30 to 40% from the bottom price. So the bottom is around 14. I could see a move back to around 18 to 20. So personally, I did start a long position, which I'm planning to hold, for a year or for a year or two on SKLZ. Started a long position at $15. But short term, I am in SKLZ warrants. I've been scaling in. It's been extremely oversold. Pretty much the same thing as the stock price. You can see that it's trading at $4 where the peak was over 30. The exercise is 1150. So if SKLZ stock were to go back to $18, then these warrants would be worth 650 intrinsic value. So they'd be probably trading around 650 to $7 if the share price were to bounce to 18, and that would be a more than a 50% move from these levels. So I am looking to continually to slowly scale in here into these warrants and just hold and swing and wait for that upcoming uh, you know 1 to 2 week kind of reversal once we finally retake the daily EMAs. I will be holding long. I will be holding for the swing until we kind of see that daily trend reversal, which I believe will be in the coming week or two. Additionally, to suggest, to alert, we I alerted some of these marijuana stocks, lottos, because CDC, for example, pull out the chart, and these weed stocks have dropped significantly from the top of the pump just a couple months ago, and now they're relatively basing decently well, so they're called. And what's happening next week is just the classic kind of 420, where 420 is the official like cannabis day. So 420, I believe, is on Tuesday, I believe. So we might see a bit of a momentum 420 kind of pump on these weed stocks. So we might see a bit of a strong move on Monday and kind of run into Tuesday. And I just took some kind of and alerted some marijuana call lottos. It's kind of hit or miss. If we do get a bit of a 420 pump, a 5-10% move, I think those will pay 3 to 5, if not 10x on some of these. The chart's not really showing anything other than kind of base and flattening out. And same thing as Cron is sort of just been flattening out, but it has been trading under the daily MA. And if we do get that Monday pump into 420 and we squeeze the daily EMAs, then we can see quite a significant move on these. So that's something to kind of just watch for next week to see if that occurs. Historically, it has kind of worked a couple times, so it may work again. History might repeat itself, but we'll have to see. That's just more of a fun little play. And yeah, that's all for me this week. So I'm gonna pass it over to MG to talk about his. That looks good.
Okay, perfect. Yep. So, yeah, DJ covered SPY pretty well. Overall, we're kind of, going a little bit ballistic over here. Really overextended. Reaching a high level of RSI, so extremely overbought. But so I mean, a pullback at this point would be pretty healthy, and I don't think it would be too significant. It would be a buying opportunity that we could continue a little bit higher. We are in the melt up phase, so this is how it occurs. So we'll be going forward as such. QQQ, same thing, and QQQ is a better, risk reward in my opinion, than SPY. Obviously, it got beaten down a little bit harder with Treasury yields, and it's moving as such. So QQQ is really the bigger play. We do have a small amount of those QQQ long calls. We liquidated some, and they're a little bit higher now at this point. So it's just a good hold, not too volatile. So it's a good hold. We're up, a great amount of profit on them, and just letting that ride. Once we see that, first kind of slump down, I probably will either exit those or just add to the position. And when we start to see a little bit of a bottom on QQQ on a small healthy pullback, Square, really ran nicely. Like I said, we caught the entire move up all the way right before the date of Coinbase IPO. And as we expected, crypto equities, they did kind of sell the news from the Coinbase IPO. So not surprising. I was kind of predicting that the day before, and I exited the remainder of the the Square calls, SQ calls, and had a pretty significant red day and has been kind of sloping downwards ever since. Looking to kind of maybe make another play on this, more of a long play, but would like to see where we kind of bottom out. I expect a little bit more of a pullback on Square. Great company though, and I think it can reach new all-time highs on a real melt up in the month or so to come. But I would like it to kind of bottom out so we have a better risk reward play rather than entering at these still pretty high levels, right? It's at 255, right? So Yeah, there's that. GME, it's really, forming that wedge. Groovin brought this to my attention, so I think it's a great setup. We did have Roaring Kitty, who exercised his options on GME. So he did exercise those options and get filled, and he bought another, I think, a couple thousand shares. I think 50,000 shares, or some odd number. So I think sentiment will be up. This is, the kind of star meme stock, and with Roaring Kitty, really kind of leading the pack. I think this is a great setup, and it's kind of the perfect storm as well, being that the chart is just primed for, a real breakout. I would put it at maybe like in my opinion, like a $200 target, which is $50 upside, $45 upside. It could go higher. I mean, it is, a really hyped stock, right? A really hyped name, so it could move really significantly. But I'd rather be a little bit more conservative. As you guys know, I'm a little bit more conservative with my price targets. So if it exceeds it, it's great. If it doesn't, if it meets the price target, that's also great, right? So I would be targeting around that level. If it doesn't move too much, and break out of that this wedge, then I would still liquidate. But I think it's a really solid play. So a lot of upside there. Tesla, like I said last week, we did. Oh, sorry, 1 second. Yeah, so Tesla, like I said last week, we did finally break out of this wedge, and we continued upwards, sold off a bit, and I think it was a buying opportunity. So we're still, moving fairly nicely, and we're heading into earnings, which is April 26th. So not this Monday, but next Monday. So I think going into the earnings, during the week, the IV will spike pretty significantly, in addition to share price moving upwards. Chart still looks good. We have broken out of that wedge, so there is that support there, and I don't think we'll drop below what I said was 715 levels. We haven't seen that, so I think it looks good. We purchased another shorter term call expiring April 30th. That will get a significant IB bump as well. So I think that is good to hold into Monday, and then possibly throughout the week, depending on price action on Tesla. But Tesla continuing to look good, so solid play there. Covering treasury yields, we're at 1.59 right now. We sold off since that spike to 1.72, which was last week. So pretty good. Sorry, 2 weeks ago, and then last week we kind of averaged out. So still pretty good. Not a lot of volatility, so it's continuing to look good. More on a macro perspective, at the Fed, they've kind of been reiterating, their usual points. We had that 60-minute interview with Jerome Powell last week. So, he was, touting the same thing. So we did get retail numbers last week on the 15th. So not much of a reaction there. So I think it still looks good. Our macro perspective on the market, going into Q3, DJ put out a paragraph in Trade Alerts, kind of explaining it. So for anyone kind of confused, we are still kind of predicting kind of a melt up scenario. What we think is that we could see more of a prolonged downturn, which is a little bit slower, as DJ mentioned, which is kind of a slower sell off, where it ends up making that same kind of significant hit as a real blow off the top, market crash like we saw in March 2020. So I think that is more of a likely scenario, just because of the fact that with the sentiment now, it's kind of at a point where there's too many people kind of predicting what could be a complete crash in the markets, right? So With the sentiment factor, it doesn't really blow off the top crash where like we saw in March 2020. Uh, that being said, there could be some sort of black swan catalyst that could occur, but I think it would be highly unlikely in that case. So I would expect more of what DJ stated, which is a little bit more of a prolonged downturn, which it is a great money making opportunity. We would probably still enter long QQQ or SPY puts and kind of hold them down, and then continue to ride those as profits come rolling in. So we still tout kind of the risk reward factor, but we are really bullish. Going into the next month, I think around Q3, which is July, would be around the time where you would kind of expect that downtrend to occur. That is also when the Fed is easing off QE and bond buying as well. So once that occurs, liquidity becomes kind of impacted, and in turn that affects equities pretty significantly, right? So that is what we're expecting on a more macro level in the longer term. Moving to BTC, a large move up, new all-time highs on the Coinbase IPO day, and then we've kind of been a little bit flattish since, and then a little bit of a sell-off, but we're still holding that 60,000 level, which was low, but we're at 61,000 now, so still looks good. We made that another sell again on the Coinbase IPO day, as it was a pretty obvious sell, flipping that high. Sentiment is just at all-time high when Coinbase IPOs, right? So, made that initial sell as well, and still holding the rest. I'm thinking about making another sell here around these levels, as I think it's a little bit more speculative, but I think it's been a little bit too quiet in the Bitcoin space. Where in the Bitcoin space, there's a lot of bears. Where even in more institutional wise, where there's significant kind of downward news that comes out fairly often. We did have some news, I think, with Turkey banning Bitcoin, one country banning Bitcoin purchases. It didn't make really a significant impact on the price. That's what took us down to, I think, 60K, but I think we would have hit 60K anyways. Slight pullback from the new high from Coinbase IPO. But yeah, I mean, other than that, there's not too much negative news, which is a little bit odd in my opinion, because negative news is flowing pretty often on in the crypto space and Bitcoin as well. So a little bit more speculative, but I'm thinking about taking a little bit more off here. So I'll see how it goes, and I might alert that as well. And then if we do have a little bit of a pullback, it is definitely a buying opportunity. So there's that as well. Just for fun, covering Doge as well. We bought it right under 5 cents. We really caught the low at 0.049, and since I alerted that about a month ago or so, it hasn't dropped since. And then we finally got that parabolic move up. We hit a high of 45 cents. And now we've since pulled back. We did actually pull back yesterday to 23 cents. I didn't see 23 cents. I saw 25 cents though. But an hour later, we jumped back up to 32 cents. I did think that was a buying opportunity, but I actually didn't buy myself. So I just let it slide. But I don't think, in my opinion, based on sentiment, this is the end for Doge. I think we can get another move up, maybe not to these 45-cent levels, but somewhere near it. And I think it would be a great risk reward opportunity. If it were to drop to something like 15 cents, I would be a buyer. But I've exited literally almost 90%, 95% of my position. So not really watching it too much here. If it drops enough, I would enter back, because I don't think Doge is over, in my opinion. So yeah, really parabolic move all over, trending all over, number one on Twitter worldwide, number one on all the, stock forums, etc. So mainstream finance is, inputting it beside, Bitcoin and Ethereum and, by the Coinbase IPO with all the coverage. So pretty significant, kind of the power of, retail on this sense with Dogecoin. And then Roblox, another one. We had a large move a few days ago, which we took off about 30% of our position. It continues to test that 83 level. We did get one pre-market on the day after IPO. And it's since sold off from that large move up. So I'm not buying back at this point. I'm just kind of waiting a little bit, just in case, just on a more kind of risk management aspect. I would rather see it drop for me to add back that 1/3. At this point, just holding, but it is a long play as well. So we do have that 2/3 position and just continuing to hold that. We do have a great average at $64, I believe. So, yeah, continuing to hold Roblox position. Just wanted to cover that. I think it could break out of that $83 level and continue upwards. Might need a bit of a catalyst. So, we'll see how that goes. And Coinbase IPO, we played this nicely. We do have a very low average. I made an initial buy on my own end right at IPO. Sold it at 415 and 425. It hit a high of 428.90, and we did make those two buys, 315, 319. I flipped a little bit at 330 as I thought it might downtrend a little bit more. Did go to just under 350 and then continued selling off. And then we've ever since came to 340, and we're sitting at 340 as of close on Friday. So pretty good. We have a good average. There is that Coinbase insider selling news that's going around. I think that might take a hit on the stock. Just to be clear as well, those numbers aren't really accurate because it kind of insinuates that these insiders sold all of their position in Coinbase and they don't have anything, but it's not taking into account their stock options, and it's not their full amount of shares that they have. Just to be clear, this is it's basically what's not unlocked, right? So that's what they're selling. It is a larger position, but I look at it more as, I think with Coinbase, it's a unique situation where their IPO is really at the perfect time, right? So you look at Coinbase IPO, where they're IPOing when crypto is at an all-time high. Sentiment for crypto is high. Institutions are moving into crypto. Bitcoin is gaining legitimacy. On the side, probably not as planned from executives. Dogecoin is running like, really insane. And, stock market equities are at an all-time high. And, indexes are all-time high. A lot of hype towards Bitcoin. Bitcoin is becoming accepted, and that portfolio allocation aspect that I've been constantly touting with Bitcoin, and the legitimacy factor is really adopting nicely. So Coinbase it's really the perfect time to IPO. There's employees in the company that or have been waiting for basically a decade with sitting on what will make them extremely wealthy. And you kind of compare it to a IPO like Airbnb, for example, which is the complete opposite, right? They're IPOing at a time where they're on the verge of bankruptcy, and sentiment towards the company is just similar to something like WeWork, right? And there's optimism, but it's extremely bad timing, right? Whereas like I stated, when Airbnb was initially IPOing, they were supposed to IPO actually in 2019 or 2020, and they did not do so. So, I mean, that's a really bad decision on their end, in my opinion. So, Their valuation could have been a lot more, in my opinion, but nevertheless, they did IPO shortly after, and now we're looking at Coinbase IPO. I've never really seen a more perfect timing for an IPO in the crypto space. They are the leader in the crypto space, the leading brokerage, and their numbers are great. They put them out. Obviously, their numbers are fueled by the Bitcoin and crypto rise. So a great time to IPO. They did direct list, and as such, executives sold a pretty significant amount. So I don't think it's too surprising, but I don't think it's really too much of a bearish thing. It's pretty common for executives to sell a kind of a good portion as long as there's not too much unlocked, and then they usually hold the rest. I mean, it's hard to say if they would be holding the rest long, but I think it's not really too much of a bearish event. I think it's kind of being a little bit more overblown in the media or on social media by people posting, the chart that you see Baz posted in Premium Lounge, which is kind of going around. So, yeah, I don't think it's really a big deal, but yeah, that's my opinion on that. I do think though maybe we might get a bit of a sell-off as retail sees this news and they perceive it as extremely bearish. So if we do get a sell-off, I think it's a bit of a buying opportunity. Coinbase is a more of a long play for me, so holding long until we get kind of a market downturn, right? So yeah, there's that. But yeah, other than that, not too much else to go over. Just overall, there is the Apple event on Tuesday, so I think that will be a great setup for a day trade. Possibly, on Monday based on price action where we are, it could be a good kind of opportunity for a move into Tuesday going into the event, but we'll see how it goes. We do have Netflix earnings as well and Snapchat earnings. So those are two big watches, and I think can kind of move the market. We are entering earnings season as well, so some of the big names will be reporting in the upcoming week. So something to definitely look forward to. And DJ, if you want to move on to questions, we can go ahead.
Yeah, let's do some questions.
Yeah, sure. Young Mandela asks, can you go over EBET, DJ?
Yeah, so if you could just pull out the chart,
Yeah, sure.
there's not really too much to say on this one. It's pretty much uh, just pretty much a esports kind of hype IPO. That's why I alerted it as very high risk. The first day, it pretty much opened at like $21 and it ripped up, closed around 35, 36. And then on the second day, shot up to about $70 pre-market, closed around near the very low of day around $25. I took a very small position at 29, and I'm looking to hold that 29 position and looking for a bottom fish level. So I would probably average down on Monday if we were to go down to, I would say, the 22, 23 levels. And I would probably add there. I would probably add there and just kind of just set a stop at 20, 21 or maybe $20. Leave a little bit of wiggle room to see if it can kind of do that double bottom, and then once it finds that double bottom, kind of trend back up. There is not too much price action to support it, so it's pretty much $21 all-time low, you know $52 all-time high. So the kind of plan is, since we are sub $30 on the second day, if we find a bottom above 21, it's very likely it will retest back to around 30 $35 range. maybe $40 range from there. So just took a very small position, pretty much 29. Just gonna, if we shoot up to the 30s, 35s, I will probably raise the stop, put a stop loss level at around 30. Um, it's just kind of ride it up. If we were to kind of gap up on Monday and go, and if Monday we kind of gap down a bit, I would just add, probably just double the small position on Monday, set a stop at $20 or so, and if we get hit, then we get hit. But if it double bottoms, we could see a good 30 to 50% bounce on the way up. So it's very low float, so it's kind of just a a risk reward type play. That's high risk. PM Metals asked, could you go over the chart for AMD? So I know Ramsey alerted AMD. I know NVIDIA announced a couple big news releases, I believe this week or last week. I think it was this week, where NVIDIA shot up to all-time highs on their stock price. And I think AMD took a bit of a hit on that. But I mean, I think it recovered quite fine. It still looks good. So I'll let Ramsey add on to that as well.
Yeah, it recovered since that news. They are long calls. I think the premium is pretty cheap in my opinion. So, a small move could really kind of blast the premiums up, especially if we kind of test the highs of February, January ish. December was where we went to new all time highs. So yeah, I think AMD is good. It's just been flat over the past month. With the kind of this rotation, certain names will kind of get the a lot of the action at some point. So that's another one to kind of look at with regards to something like PLTR, Palantir. It's been extremely flat, and I think the risk reward level is really good at these levels. Same thing with the entire SPAC sector. You'll notice I alerted CCIV warrants as well as SKLZ warrants on Friday, I believe, or Thursday. Both of them are like are just a really good risk reward here. You might have to wait a little bit of a long time. It's hard to say when it would recover, but at these levels, buying is really cheap and it's just a great hold. Another one, GHVI sold off a bit. We did sell a bit at the highs, and but it's more of a long play. Even at these levels, GHVI is just really cheap in my opinion. As a long play, I'm really confident with it. I have a large position in GHVI, for example, in the warrants, and just continuing to hold those. I would even add at this point, but I have a pretty large position already. But yeah, I mean those names like CCIV, GHVI, those warrants are just really good risk reward at this point. I don't see much downside, but the upside is really significant. So yeah, both of those are good long play. But yeah, going back into AMD, chart looks good because we've recovered since the Nvidia news and the chip shortage news. So I think continuing to hold those calls. We are down just a bit on those calls, but yeah, I think they'll recover nicely. Moving on, SK asks, Tesla calls thoughts, cash around 30% of my portfolio. Should I allocate more? Yeah, I would maybe allocate a little bit more, but depending on portfolio size, but I think maybe 40% is around fine in my opinion. Even 30% is not too bad. Given that a lot of our positions right now are a little bit more longer term, so it's not too bad. Maybe increasing it a little bit more. It might be more easier on your end if you were to do that. So And then with Tesla calls, I think maybe you might have missed it, but very confident on Tesla. Heading into earnings next Monday, so we have exactly a week until earnings. Not including the date of Monday, which we have as the earnings are after hours. We have exactly a week, and I think it's a great setup to continue upwards. My initial target was about 800. I think we could reach it, but we'll see. I think around 770 is a more practical target, but we'll see. And the calls will move fairly significantly once we make that move up. So Tesla looks great. Neo chart, Neo I haven't looked at in a while actually. I'll pull it up. I think Neo, where are we sitting at? Neo kind of been on a bit of a downtrend. We're in March. We are pretty far off from the highs. But I mean $36 is not bad. Neo is not too bad at these levels. It's holding fairly okay. Lows just under above $30. Neo is not too bad. I mean, at these levels, it's a little bit better, but I would wait for kind of a clear reversal before entering Neo. Like I said, Neo, I don't like the name too much at those levels. So people were asking me whether to buy in the high $50 range and the low $50 range. I said no, it was way too high for me. I was selling in the mid $50 range on Neo. So I mean, now you look at it, I haven't looked at it in a while, but now I mean, you look at it, we're at the mid 30s, so significantly down since then. I think this is a better risk reward at the $30 range, but I would personally wait for a trend reversal back up before buying in, or I would look for a catalyst. So maybe in about 2 weeks when we can get delivery numbers. Last month's delivery numbers, so in the beginning of April, weren't that great. Given that numbers kind of were under expectation, and they kind of blamed it on some logistical issue. I think they blamed it on chip shortages. So I mean, I think it's more of a competition issue with Tesla, but because Model Y was ramping in China and the made in China Model Y as well. That's my opinion on that. But I would wait for kind of a clear catalyst. So maybe the May delivery numbers may be a catalyst to move this upwards and kind of start a bit of a trend reversal. So if that were to occur, I would be purchasing. I would be a buyer of Neo, but at the current time, I would personally pass on it, in my opinion. DJ, you can add on to that if you like.
Neo. I made a day trade on Neo on Friday just because I noticed it kind of shot up when everything else wasn't shooting up. So I figured it would be quite strong today, and we did see about a 2 or 3% move on Neo. So it did end up going up a bit. Stopped out a bit early, pretty much just small profits above break even. Like Ramsey said, I would kind of play Neo on a catalyst. I'm not too much into the EV space overall, so I don't follow it too much. I think Neo. I mean, if you're looking from the top, it's down about 40% from the top, but I mean, if you're looking from the bottom, it's still up, thousands of percentages. So I mean, it's got good value, but I think it could really kind of go down a bit more. I mean, it's it's trending down on the daily when indexes has been trending up, and the majority of growth and tech stocks, aside from the SPACs, have uptrending daily charts at the moment. So the fact that the daily chart is still downtrending, with indexes and major growth stocks uptrending on the daily, is a little bit of a red flag there for me. So um, personally, I would pass. And like I said, I'm way more conservative. You could say. I mean, I'm like I mentioned in the post, I'm 75 to 80% cash and looking to kind of add on to 80, 85. Um, it's not necessarily like I'm not going to make any plays or anything, but as I've said, I'm just going to make shorter term plays, more few day flips, intraday flips, and kind of go cash other than some long plays. I didn't mention in the post, but for I did mention in the alerts though, in the alerts that for the group, um, I did mention the long-term account. I am not going to be too much in cash. I'm going to be around 50% cash in a long-term account, about 50% in equities, pretty much. We'll be in like I mentioned. The major holdings will be PaySafe warrants and GHVI warrants, which will be Matterport. Um, and I did take a starter smaller allocation on SKLZ, which I mentioned around $15 on the long-term account. Um, I am going to kind of see where things go from here. Those those two warrants would be my main positions, but I would likely probably have 4 to 5 smaller positions, SKLZ, SPCE space, Virgin Galactic, and uh, and maybe one or two CCIV warrants look to hold as well. But I am going to allocate the majority of the cash into the two names I mentioned earlier with PaySafe and Matterport, and the other ones hold a relatively smaller position and rest in cash. Those are the kind of names I like long term for play, speculative growth, and just a very strong performance in general. And because I will kind of have those names in the longer term account to kind of just hold, I don't really want to have too much exposure in my trading account since I'm already exposed to kind of the names I like long. So I don't want to really double the exposure to those names or kind of have too much exposure on other names in the shorter term. So I am looking to kind of just go near full cash in the trading account and stick to trading uh, on there while I kind of hold passively the longer conviction names in the other account. So that's how I'm playing it. Once again on my end, and yeah, Neo on my end isn't one of those long-term high conviction names, so it isn't something I'll be picking up. Rocha asked, "Are we on CCIV warrants still, and do you guys see upside in the coming weeks?" Yeah, so like I am still both Ramji and I are still in CCIV warrants. The original average we got was very cheap, and we flipped on the way up, and now we're re-entering. These are in my long account still at the moment, and I am just holding on to them. As for upside in the coming weeks, I really don't know. It doesn't look like there is upside in the short term, to be honest. It's kind of just the same story with all SPACs. Um, Pretty much anything related to a SPAC or was a SPAC or just de-SPACed is just getting absolutely destroyed. So, um, I mean, it's on the if you're trading and short term focused, then this will kind of really hurt you. If you're long term, you're really thankful because you're getting really discounted prices, at a very cheap time. It's just sort of the sentiment change, right? It's sort of like, you know, 2 months ago, even though SPACs are trading 50-80% premiums, everybody is willing to buy them no matter what they are. Now that, it's 2 months later, everything has fallen 50-60%. Everybody hates them no matter what they are as well. So short-term pain and bloodiness should continue, or flat action, I would say, slow drift. And long term, it's good prices on the good place. So that's why I am kind of just holding that and the other names I mentioned in the long account. And short term, I'm pretty much reverting to all cash, looking to trade to avoid kind of this bleed out, I would say. The reality is, it can kind of reverse any day. Like it can literally, like all SPACs could reverse on Monday, as soon as Monday, or it could just take weeks, months, you know, from from the time it takes to reverse. Like there's really no kind of saying when it kind of gets traction again. I mean, just like nobody really knew when SPACs would take off in the first place until SPACs started taking off. So now it's the opposite. No one really knows when they'll stop bleeding until they do. And also, it's we did see in the SPAC sector, it was more of this slow move down. Like initially, we had a pretty big move down, and then we bounced, and then we kind of just slowly drifted lower and lower. That is basically what I think it will kind of happen with the with SPY and QQQ, the indexes, like I mentioned in my Outlook post for Q3 and onwards. It's sort of this kind of preview of what happened to the SPACs. It's not necessarily a crash like we had in March 2020. Like a crash is actually quite easy to deal with because um, with such a large crash, a lot of people get panicked and sell the initial crash. And I mean, it looks big if it drops 5-6% in one day, but I mean, once you're out, you're out. You don't really get punished. Um, but the more punishing factor is if it kind of drops 2%, goes up 1%, and it drops 2%, and then it just kind of keeps doing that, and then 2 months later you're down 30%, right? That's kind of the ones where people stick in and average down, and then it just kind of keeps sliding over and over. So that's pretty much what happened with the majority of SPACs. So I do think that is kind of the preview of what happens to the indexes once we kind of top out somewhere around Q2, I think. So that's my take on that. But because a lot of the SPACs have gotten hit so hard right now, and some of them are pretty good value, very good value in my opinion for long term. I'm not actually sure, even if we get that slow move down on the indexes, if the SPACs by then will kind of continue that slow move down. They might actually kind of reverse, just like they're kind of doing the reverse thing right now. So long term, don't really look too much into the overall market trend. Try to focus more on the individual ticker. So I would kind of, because a lot of those individual tickers have dropped quite significantly in valuations and stock price from the top, I do think that right now would be a good time to kind of buy some of these and hold. So um, yeah, that's my thoughts on that. Ramji, if you want to add anything.
Yeah, like I mentioned before, CCIV warrants, GHVI as well. It's my favorite name. Both, yeah, they're just really just great risk reward at this price level. So, as a long play, it's just a no brainer. That's why I even actually added more on Friday, and yeah, I mean, just continuing to hold that, I think it's just a solid hold, a lot of upside potential, with very little downside risk there. So, and then Dre asks, "Hey guys, what do you think about AI calls now since it looked like it's bottomed out?" Also noticed Microsoft slowly drifts up, hasn't had any real pullback. 300 June July calls. Yeah, Microsoft's not bad. Similar to Google, Google more so just really didn't experience a sell-off at all. I think because Google's looked at as more of a value name, even though it's tech. So you really didn't see any movement during the yield kind of scare, you could say. So similar to Microsoft, you didn't see much of a movement, but I mean a little bit more than Google, but I think it's more based on the actual price level of Microsoft being at a low price level at 260 compared to Google, which is in the thousands. But I think Microsoft is also kind of I think looked at as a little bit more of a quote unquote value tech name as opposed to other techs. So yeah, I mean there's that. I don't think Microsoft is that great of a play. I think if you would like to play a name like that, I would actually play Google in that aspect, because I think Google based on fundamentals, I think Google is a much better play, much better company as well. So I would play Google in that aspect if you're looking for a month or two play up. And then with regards to AI, I do agree that it looks like it bottomed out, and it has sold off extremely significantly. I mean it it's down about 60% from last month highs. So um there is that. Yeah, so I think yeah, you could say it might have bottomed out here. I think I would enter calls on AI. I would enter kind of extremely far expiry leaps, in my opinion, would be the safest option. And then just kind of hold it throughout. And when it does recover, those leaps should print. I haven't looked at the options chain, but I'll look at it because this looks like a pretty okay play. I think the IV should be, extremely low, as we've just been drifting down for, 2 months now. And it's a significant drop. I mean, 60% from the highs. So, yeah, I would go into leaps. And I'll pull up the option chain and look through that on a good strike and expiry date based on the premiums. I'm not sure how premiums are looking, but I would expect them to be fairly cheap at these levels, given that we've been on just a slow drift down. And then NVSAU, considering splitting NVSAU, any thoughts? Yeah, so NVSAU, yeah, the warrants are good. I'm not sure. Did NVSAU split yet or no?
Yeah, they split already.
Okay, because I just have it in my long account. Okay, yeah. So are you asking to split or?
I think he's asking if he want to split the units into the shares and warrants. Personally, I wouldn't. I mean, I don't really think there's a reason to, because the units are trading, and it's trading at basically the the price, like the same price as if you had the shares and warrants. So it doesn't really make too much of a difference in my opinion. Like if the stock is at $10 and the warrants is at a dollar, right? Then you would just be getting 1033 on the units. So it's pretty much the exact same thing. The only difference would be you get to own the shares and the warrants separately, but the overall value is arbitrage to be the exact same thing. So I mean, if your broker doesn't charge a fee for splitting, you could go with the split route, but it really doesn't make a difference in my opinion. Either one is the same value, so it's kind of up to you for preference, I would say.
Yeah, I think it'd be the same thing. If you would like to leverage up, you could essentially split and then allocate capital from the shares into the warrants. So you could do that, which is not a bad option. But even just holding the units, it will move in the same respect to the value of the shares and the warrants. So it's not really too big of a deal. But regardless, as a long play, just like CCIV warrants and some of the other warrants we're holding at this level, it's just a really good upside with really just no downside at all. So yeah, and then TG, if you want to touch on anything else I was stating.
Sure. Oh yeah, Microsoft has been drifting up. Like I said, Microsoft, Google, they've been kind of dragging up SPY, QQQ, and everything up to all-time highs. I wanted to take a position, to be honest, at this point on just risk reward preferences because I mean, like I said, the daily RSIs are very high on SPY, and the amount of green days we had in a row. I mean, I wouldn't really go put, like I mentioned, but the reward on calls here, it's not very high. So if you go in on a starter position, the problem is that if you take a starter position and it continues to go up, you're kind of going up maybe 5 or 8%, or maybe 10% on a good day on the June calls. But if it goes down, you really can't even kind of average down, because if it kind of goes down, it can kind of go down for like multiple days. And when you go down, the calls are not going down at the same speed of 5 or 10%. They're going down probably 10 to 20% on the way down, just because right now we don't know where the top is. So premiums are kind of reflecting that. But once you put in a red day, you're essentially put in a temporary top as well. So premiums will reflect that on the way down. So I mean, personally, I wouldn't really do it. There's kind of two ways to do it. You play a short-term call. So like if it goes up, you can actually reap like solid, 20, 30% gains on the shorter term play. And if it goes down, you would kind of just cut it anyways. Um, and or you can kind of just go shares, but shares doesn't have the same amount of upside as to options. But I don't really see a big reason to kind of start a new position in these monthly calls at the moment, because the reward to the upside is quite low and the downside is quite big. So I mean, I would rather go shorter term, calls that expire in 2 weeks or so. Right. So if it goes down, it's kind of bust anyways. But at least if it goes up, you get more out of it. It's kind of the same risk reward as opposed to a monthly call at the moment. So that's my thoughts on that. And then Dre also asked thoughts on Clove short squeeze. Um, yeah, it could short squeeze. I mean, there's a whole lot of shorts on Clove for sure, and it did have that big move, on Friday and last week. But the premiums are quite high now, I think, because of that move on Friday. So I mean, I don't really know. Like A lot of these short squeeze plays, they're not necessarily bad plays, but because they're so dependent on an event to happen, it's pretty much what I would say is just the lotto. So, I mean, you would kind of treat it as a lotto. So, just if you want to take the play, you would kind of play whatever you're willing to lose and go for it. But I mean, I would never put a real amount of significant money into a short squeeze play, because then at that point, you're really banking on something very specific to happen, and if it doesn't happen, then you just kind of like lose out, right? And it's that situation where the premiums are quite expensive enough so that it really does need to short squeeze, and each day it goes flat, it will kind of just drift down naturally. So yeah, that's my take on that. Yeah, Ramji, if you want to add anything over there.
Yeah, with Clove, I'm not too sure because there was some sort of discrepancy going on in regards to the amount of shares actually short. So I'm not too sure the exact amount. I actually can check today because it updates at the end of the day. So on Friday, I wasn't able to kind of verify for sure short numbers because of the fact that most sites weren't updated. But I can check it again today and see if some of the numbers were accurate. But I was seeing that the numbers put out were inaccurate and kind of over blowing what the amount of the float that's short. So I'm not too sure about that, but I'll look into it. And if it is a significant amount short, I think it is a great play for a short squeeze. And I looked at premiums, and they're pretty cheap as well. So it's kind of a good lotto in that aspect. But I would kind of need to look into the float more and see if it's actually accurate in regards to Clove, and then we can kind of go from there to enter a longer term more not too out of the money call, which is I think would be the safest bet for the most upside, as Clove has been really kind of flat over the past 2 months since the kind of SPAC sell off and the initial Clove short report as well. So yeah. And yeah, it looks like that's all the questions. We've been running for about an hour and a half, so we'll wrap it up here. Once again, going into next week, just watching the big earnings, some of the vaccine names, and then maybe also Netflix and Snap, looking for those high numbers. We'll see if it occurs. I think it's more likely to sell off a bit, but we are entering earnings season, so a lot of the big names will be earning and will be reporting in the upcoming weeks. So we'll be watching that. Apple, I think, is good for a day trade on Tuesday or Monday, going into their Apple event, and then Tesla. This is the final full week before their earnings, so expect a significant move throughout the week, in my opinion, more so to the upside. So we are holding those calls, and I think they will perform very well. Other than that, we'll be watching the indexes as well, looking if we continue higher or get that a bit of a healthy pullback. So we'll be watching that fairly closely. So I hope everyone has an amazing weekend, and we will be back on Monday to go get this money, guys. Take care, everyone, and yeah, have a great weekend.